To some other news now. Today marks the official start of tax season as the IRS began accepting and processing the first of what is expected to be 168 million individual tax returns. Channel 2's Dave McKinley sat down with a tax expert today who explained why many middle-income taxpayers, especially those with children, Dave, might see smaller refunds this year.
Quite possible, Kate, especially compared to just last year. And this has primarily to do with a number of tax credits that were offered as a response to the pandemic returning to pre-pandemic amounts as you prepare this year's filing. Now, one of the biggest changes expected is the loss of the expanded child tax credit, which was raised from $2,000 to as much as $3,600 per dependent in 2021. The earned income tax credit and the child and dependent care credit will also return to 2019 standards, with child and dependent care credit in particular returning from a maximum of $2,100. That is a stark difference from the maximum $8,000 that could have been sought when filing your taxes last year.
So people are going to see a difference in their refund because, their tax bill may increase just a little bit, and, the refundable portions of their credits may be decreased. So, it could be an amount, and again, it's a case-by-case basis, but I think a lot of people are going to see smaller refunds.
Tax incentives for charity are also reverting to the rules in place prior to the pandemic, where taxpayers can only deduct charitable contributions if they itemize their deductions on Schedule A and can only claim deductions of up to 60% of their adjusted gross income. We'll have more about these changes and some helpful advice when we take a deeper look into this during tonight's town hall at 5:30. Dave McKinley, Channel 2 News.